What's up, everyone? This is Rob with Closer Certification. In this video, I'm going to be covering one of the verticals we're picking. This is an announcement, which is I'm going to use this as a quick outline, but just going through everything here. I've already done real estate, so if you go on YouTube, you can literally find videos of me from I think 2013. Relis Group. Let's see if you can find it here. Columbus. I did a lot of stuff. Real estate. Maybe not. I probably have some shorts. I did a bunch of demolition and different stuff like that, but I used to sell real estate back in Ohio. And I used to be Relis Group at Key Realty. Like, I'm still on Yelp with 1-star review. But this was back in the day. I used to be over here. So I already did this. I had job postings. You can see here, this is when I was hiring people. So I already did this and that. Then I did it in demolition. I made plenty of money in real estate brokerage. Then I did it in flipping. Then I did it in painting services and demolition services. And I did it in national demolition services. I trained a team of 5 to 6 people, a skill set of takeoff estimating and bid proposals. And I scaled that nationally to 7 figures. And then that was under paint demolition. So here's the businesses that I did stuff in. I did Relis Group at Key Realty. Then I did Home Investors. I did a franchise. I bought a franchise for like 50K. And We Buy Ugly Houses. They're out of Dallas. I owned one of these. And then I did, if you look up Pink Demolition, I started doing Pink Demolition. This was all stuff. Pink Dumpster Company I started as. You can see some of my shirts here, the old shirts. That was I scaled that to 7 figures, easy. Then I did Pink Development and Construction. You can see me here. I'm on Alignable. This was a lot of the trusted general contractor that was ground up. This is a hotel I proposed. There's a lot of stuff that's in a press release. So all sorts of, there I am right there, very similar hair. So I did 7 figures in that. I also did 614 painting, same thing. Let's see if that comes up. I don't see any. I'm sure you guys can find it online. There you go. We have some 5 reviews, but that was a virtual service that we started. And so those are all the things that I did it in. But the most recent one that I did, this is still a business I own. And I'll show you guys a recent house. This is just so people know. Here it is, 92. This is a recent house that was completed, all black. Literally designed it in my house. You can see some of these, what the inside looks like. So I was selling high ticket. This is a $260,000 new build that we built for a client. You can see what some of the renderings look like. I was doing already a lot of digital sales. I moved down here. And so, but it was very limited, right? So it was based on network, people that I knew, forum posting. It's financial services, B2B and advisory, entitlement advisory. I did a lot of those things, right? I don't need to do this. I'm just showing what's possible for me, which is what makes this possible is the combination of a lot of things that I'll get into, but life insurance is a business that a lot of people are growing massively. Would I consider it high ticket? Yes, because you're selling $20,000, $50,000, $100,000, $500,000 financial products and insurance products. It's why you need a license. It's a regulated industry. And it's just like mortgages, just like real estate. It's a certification that does a lot of those things. And it's one of the easiest ones I've seen. And there's a new growing path of remote closers. And if you just search that up, like on YouTube or just like on the internet, if you just search remote sales life insurance, you're gonna find guys that a day in the life, my first 90 days. I'd like to see this guy's bank account. So that guy has 40K views. What?
So story time. What was it like when I got started selling life insurance? So here's what it was like my first 90 days as a life insurance agent in 2023 when I first got started. I quit everything to go full time in the life insurance business, and I was in a rude awakening. My upline told me it's gonna be easy, you're gonna make all this money, you're making some sales, but in the first 90 days, I got hit with expensive chargeback bills because I sold business that didn't go through and I owed the insurance company thousands of dollars. You should know what a chargeback is. I also spent thousands of dollars each week on lead costs because I was told that I was going to buy leads and make money. That didn't happen. I told I was going to get trained for my upline, but I never did. And after 90 days of spending thousands of dollars getting hit with chargeback after chargeback, I did make it through, but ultimately it's only because I had a little bit of money saved to invest back in the business. So if you're an agent and you're being sold this dream, be warned, it's really hard in your first 90 days. So storage.
Okay. So I would say that that's a new guy that didn't know anything. That's cool that that happened. You can see your story sounds like mine. I relate to that. Never worked for a company. That's me too. I disagree with this. You're independent. It's not the company's job to buy you leads. Exactly. Excuse. I'm new to this, trying to figure it out. There are positives, negatives, usually more commission, and they won't hold your appointments. No lead purchases, no chargeback, but extremely low sales. The MLM way of doing things was fantastic way before the internet. Is this MLM? I don't know. Not really because it's regulated. A lot of MLMs like selling. I don't even know any MLMs because I've never been that dumb, but that would be an example. So if you're an independent agent, no benefits and PTO unless you buy it yourself. Was the product good enough? So I would say that some of it where like it is one of the best. Let's see what else. How much does a salesman make in life insurance? There's a lot of these interviewers who really makes money are the people that sell the commissions. That's what that guy says. And here's another guy that did this a year ago. You see how now he says I'm hiring. So this is a guy trying to sell it. So I'm not sure who he's with, and I could care less. It doesn't matter who you hang your license with. It's just like real estate, guys. There's 20 companies out there. Okay, so based on that, let's go back here. What makes life insurance the best part? Life insurance is a regulated and mature industry. It's the carrier's forward pay commissions, which is 60 to 100% of the first year premium. Now, do you owe those people? Let's go into this. Let's go into this topic a little bit more. For anybody that doesn't understand what a forward pay is. When you get a payment, you're selling a future income stream in exchange for money now. A carried forward pay premium is life insurance are compensated when they sell a policy specifically through advanced commissions. Now, this is similar to trucking. I used to run a trucking company. If you drop a load off or what's called an LTL, you get paid like 97% of what that is because the service has been rendered. The life insurance, Mutual Omaha, Ethos, AIG will forward, they will advance it and advance 60 to 100% of first year premium of what they're expected, often right after the policy is approved and goes into force. So if someone buys $100 premium, the annual is $1,200. If it's 80%, you would get 960 of that if the commission rate. If the carrier offers 100%, which is rare, I've never seen that, you would get that. So if they offer 60%, you get 720. You'll sign a contract either through an IMO or an FMO. It will define the commission structure, set expectations for chargebacks, this would be a really important clause to review. If you haven't dealt in contracts, that's one of the benefits of being trained and mentored, understanding how this works. Outline compliance and legal responsibilities also include an advance agreement where you agree to repay commissions if the client stops paying. This is called a clawback. The carrier will claw back biggest risk with forward pay structures. Now that's up to you if you do it. So if you have 960 up front and the client cancels, you may owe 700. Typically they wouldn't, depending on if you put this in an LLC or in your own name, that would be a part of it. So if you take a forward pay or the advance, there will be a contract that outlines it. So even though that guy said I wasn't told about this, even though he was, because he signed a contract. Okay. So if there is a chargeback, can I decide if this goes to me personally or to an LLC? Or to an LLC, but it depends on how the insurance carriers or IMO is set up. Paid personally, default for most new agents. If you sign your carrier contracts under your name and SSN, they will go to you personally. You'll receive a 1099. If you do a LLC, which shields your personal liability, and it's a pass-through, an S corp's a pass-through, then your commission would be paid to an LLC or an S corp. You would get an EIN, often a contract under the business name. Check with your IMO if they allow commissions to an entity. Most do, but some have extra steps. You can always start personal and switch to an LLC. I wouldn't want clawbacks to a personal, right? I want to shield personal liability. How to prevent clawbacks. So as you're getting set up with your main insurance carrier, which I'll be doing this week, you want to sign this under your LLC and your EIN, not your personal. If you're giving away your social security number, you're in bad shape. All commissions are paid to an LLC and then you pay yourself a salary. If there's a clawback, it's owed by the LLC, not you personally. The contract must be written as LLC. Don't guarantee. Now, I would say, but if I'm technically the license holder, I don't think a license holder can be in a business name, can it? So I'm practicing this, but I guess the forward pay structure could be assigned to an LLC. Is that correct? What is the technical requirements of how that's possible if I'm personally licensed? And how could I avoid it if I want to set it up at some point? How would I transfer that? Would I need to set up my own IMO or agency? And this is the best part of what we're going through. You're licensed personally. Insurances are by an individual, not a business. Many states allow them to be an agency or business entity producer. That's the legal path. Yes, you can assign a commission to an LLC if you are the one personally licensed and writing the policy. Registering your LLC as a licensed agency called a business entity licensing, getting your LLC appointed with the carriers and signing a commission assignment agreement with the FMO or carrier. So as I set this up, I can set up an LLC or this, or I can just do anyone. Register LLC as a licensed insurance agencies. Apply through the Department of Insurance, attach it, ask your IMO, I want to contract my LLC to receive commissions. What's your process to assign commissions to a licensed business entity, right? So in my case, what is FFI, First Family Insurance? So in this example, at the level that I'm at, First Family Insurance is an independent insurance agent and FMO, field marketing organization that works with licensed agents, including life insurance, health insurance, annuities, dental, vision, and more. They're based in Florida and known for their call center infrastructure, agent support, and high volume lead programs, especially for final expense. Under them, I am a licensed insurance agent, contracted through that. Your upline is, or FMO, they have a carrier relationship and issue you subcontracts. That's called an FFI. A carrier, Mutual of Omaha, Aetna, or that, and the client. So if you're contracted through FFI, who is appointed directly with the carrier, I'm a sub agent under their umbrella. Who pays me? Technically, the carrier pays FFI and FFI pays me, right? So like FFI pays me according to my contract with them. That's commission splits, advance percentages, and things like that. You're likely to pay via direct deposit or via a TPA and payroll processor, one of these. If they allow you to submit it under an EIN, it might be possible. So a lot of the times, do I personally owe them? So FFI is considered what? If you look at the parent structure of this, which is a lot of that field marketing organization or an IMO, middle layer between a carrier, which is true, Mutual, America, Aetna, and a licensed agent. So you have a carrier, an FMO or an IMO, First Family. I have an agent. I carry one. And then you have the client, the person you're helping. You do not contract directly with carriers. I may or may not. You're contracted with them or through them. So they're going to help me do that. So as you get started, if I was doing anything and I'm bringing a lot of people in, then I would probably make my own FMO because it's much more scalable. And then I would partner with someone that's been in life insurance for quite some time. So if I get a forward pay structure, how high does forward pay go in the industry? So if you have 75% is common, 100% first full year commission advance immediately, common with top agents or low risk leads. Now, this is what I was able to negotiate. An over advance means more than the first year. That's rare and risky. And then top tier agency or self-generated over advance. This would be that. So this is clawback risk increases. Some IMOs cap them to control exposure. Carrier policies, carrier do up to 75%, others allow for 100. And we would say, what is the lowest or least likely to get clawback? What type of premiums? So what type of premiums that we want to sell? Let's check this out. Now, what type of life insurance premiums have the lowest default risk? These would be people that don't want, I would say it's pretty low. Predictable and budgeted, low face value, immediate need products like final urgency or final expense, Social Security, annually paid policies, paid in full, self-generated, or qualified buyer, final expense, mortgage protection, term life with bank draft, big liability, motivated families, paid in full annual premiums. The biggest ones are guaranteed issues for youngers, larger premiums with no education, policies on tight budgets, door knocked or cold stacked or low trust, and then double stacked. So when you're selling a policy, you get to decide if you want to sell it to them or not. You don't have to help these people. You could stop at any time. So as we're doing it, we're looking at final expense ACH. What are the premiums per month for the final expense and mortgage term? If you want to tie it to a mortgage, which would be great, here's final expense. Let's see here. Replaces income or pays it off. So this would be a different type. This is term life. There's also simple life. Term policies can be much cheaper. I think the age group that you sell to is going to be the biggest one. And if we want 1K payouts, what would be the amounts we should target? I don't disagree on the $50 a month. I think that the average policy is 100. I think as you get higher, you have to kind of just run your default risk. And this is going to be like a very advanced. You have final expense here, term life, IULs or whole life, or simple life, simple term life. This is about what we're looking at. So this is, we should target around that. Sweet spot for that is 90 to 120. So as these come in, we'll build a business plan. But as you go higher, I don't disagree with that. Anything that's over 150 bucks, it's going to be, you have to look at affordability. For younger, higher income. Let's see here. We want low clawback risk. So callback in 2 weeks. This is what we really want. Comp levels, monthly premiums. So this is something that you would talk to somebody that's been in the industry for a long time about it, but just an example. So the premium is, what about what about larger? Or people that are a little bit more educated. Key in person. These are some different ones. Annuities, executive bonus plans. These are like much higher for types of businesses that are like this. So monthly premiums around that. That would be like IULs, whole life, or that. Commission is partnerships, LLC, small corporations, doctors, lawyers, real estate investors, and developers. These are more complex and sophisticated ones of people that might understand what they're shopping for. So term key persons, COLIs, these are the types of those. And those are the top 1% policies that are paying out big time. They may require. And so this is what we're going for. This is personally, they might require full medicals. They might be for large families. As we start getting in here, we'll be able to profile some of the profiles of people. I can't share personal information, but I can talk about the people that I'm working with. But if we want to get higher one, there's the volume, which is like the 500 to 1,000. And then as you get higher up, if I want to sell five policies this month or 10 policies and they're higher priced, then I'm going to be great. So I'm looking for IULs. I'm looking for IUL type leads, and I've already done that, but that's just an example of what we're doing. So I want inbound, not outbound. I'll be building my sales funnel. I'll be able to go through a lot of this, but this works great for a zero vertical. Again, for one-on-one mentorship, think about getting into any vertical and doing business planning. It's a great thing. I'm scaling my closer certification course right now, and I'm being very transparent on the policies that we're covering. So I would say that in the same way, this is exactly what we're doing here. So this is a great vertical. It's a great side hustle or a new one for real estate agents, ex-mortgage, car sales, door to door. It's also a skill proof. You're selling a digital financial product that also does forward pay. That's extremely rare. One of the only industries that I've ever seen it. So let's talk a little bit about the licensing process, how I got licensed. I got licensed last week. I'm going to show you guys that. My license was issued on the 23rd. It's the weekend right now. So if we go here, it was Thursday, I think. Yep. I called every day looking for it. Here's my license number. You can go and look this up. Again, not a huge secret. You can even see the email I used was support at close certification. And it talks about continuing ed, CE dates. I have 5 years to complete it. And here is the license that I am able to do it. This is in the state of Florida. So if I break this down a little more, can you show all of what I can sell? Every single one and the highest payouts to lowest payouts with this license. Okay. So we're going to show every different type of program that I can sell. And here's what we're going to do. Life insurance, that's term, whole life, final expense, and IULs, variable life and variable universal life, fixed annuities, variable annuities. I cannot do these because they require that. Business and corporate life products, buy, sell, key person, and executive bonus plans, living benefits, riders, returns of premiums, and supplemental done. So variable annuities, which is up here, variable annuities requires a series 6 and 7. So if I wanted to scale that, I would rather own the business than and the advertising and make an IMO like Family First Insurance, then scale it up because it's there's a lot of people that I can grow with this. So this is a lower level person that's gonna grow with it. People that hold series 6 and 7s is or 63s, 66, extremely smart, but they're gonna run into that. Up to 7% on 100K requires that. The next one will be fixed indexed annuities. This is 3 to 30K. And then key persons, IULs or VULs, variable universal life. These are big premiums, 300 to 2K a month, 70% to 100% comp, term life, whole life, final expense, returns of premiums, and that. Final expense, I would say this is like a lot of volume. This is where a lot of people start. It's really low level, and this isn't a lot of money. I'm starting up in here from day one. IULs. There's guys I'm talking to right now that have to write 2 or 3 policies a day, and they're kind of stuck down here in an outbound sales funnel. And we're targeting this. So can you explain the time frame to get a series 6 or 7? Now I would go, this is probably a year plus. This is mutual funds, variable in that. This is for a series 6 or 7. You have to be sponsored by a FINRA and be that. And here you go. Required before that is securities industry essentials, 1 hour and 45 minutes, study time 20 to 40 hours. So if you wanted to get this SIE exam, that's $80. If you want to get the series exam, that's for a 6 or 7. And what's the fastest you could get it? And you might be above some of the best guys. You could get it in 4 weeks if I wanted to, right? So self-prep, cram under FINRA. So if I'm looking for guys like this within my agency, you have to find a broker dealer and then go from there. Crash prep, that's going to get you done quick, and then pass your series 6 and submit a U4. So in less than a month, you could probably get it. 6 versus 7. If you ask what the difference is, a series 6 is going to be for variable annuities. A 7 is going to cover that. But if you're just doing life insurance, it's going to be that. So you get to decide everything series 6 plus stocks, bonds, ETFs, options, REITs, and everything else. So if you really wanted to get it, remember, is a college degree required? This is the big difference. To get a series 6 or 7, it's not required. Just a high school diploma. Okay, so if you haven't gotten a high school diploma, sponsoring firm I need an SIE, I need a background check, no felony, and good moral character. A college dropout could get a Series 7 and start a mutual fund. So could a college dropout get a Series 7? Absolutely. So if you never went to college, you need to go get a high school degree because that's what's going to run into it. If you're fresh out of college, it's not a problem. Many top producing ones do that. And to sell the highest ones, I need a Series 6 or 7. Is that right? Because they're so complex. To sell the highest commission financial product, like a variable annuity or VUL, which is variable universal life, you need a 6 or 7 in addition to that. So if you talk to a lot of these young guys coming out, yeah, they might be flexing for final expense down here, but they definitely aren't going to get a Series 7. I could get a Series 7 in my sleep if I wanted to, and I may. To start a FINRA registered broker dealer, do you need a Series 7 or more? Let's check. You need, the principal must hold a Series 7 in addition to a Series 24 or a Series 27 or 28. Security, your SIE. You personally don't have to hold all these, but someone must. And at least a Series 24, right? So you have to form a legal entity. So if I wanted to go that direction and open this up, typically this isn't a lot. Look at these, $50,000 to $100,000, right? It might, starting a broker dealer, it's a regulated process. They can spend 75 on a lot of these things. Why most people don't do it? Because of that. So you need do I need a Series 7 to get a Series 24? So you see the branch chain here. You need to get a Series 7 and then you can get a Series 24. It's a principal level. It doesn't authorize you to sell it, only to supervise other. So you have to sell them and understand how to do it and then go to it. So that's everything that's required. What is the highest level series? This is going to tell you. Your Series 24 requires it allows you to supervise Series 7 reps, which are guys that want to do that. So there may or may not be one of these. There's 27s, Series 4, 9s and 10s, 14 and 16. It allows you, a 24 is here. FinOp, which one allows you to open up an investment bank? If you want to open up an investment bank, this is Wall Street financial products, you need a 79. Investment banking activities, M&A. And here you go. You go up to form a legal entity, sponsor, Series 79, 27, 50,000, undergo FINRA membership and register for it. Capital requirements for an IB, you could start an investment bank for less than that, right? So you study all these things and you might move to New York. But if you're going to open up, which one would allow me to start my own IMO? If I want to start my own IMO, you don't need any. You need a license. You need carrier appointments, an upline or FMO contract that allows overrides in a business entity. What about an FMO? If you want to be an FMO, let's check it out. Field marketing, top tier distribution partners for them. direct contracts with carriers, appoint IMOs, MGAs, or agents, lead platforms, CRMs, ENO, and tech. This is where I'm at right now. This and FMO is where I'm headed if I was to continue. All you need is that. So anybody, if you want to get into this, you can do that. But if you want to scale up, life insurance, you need that, an LLC, ENO, contracts with carriers through larger aggregators, agent recruitment model, compliance, tech, and training, and the other ones. So this would be an independent marketing org and then an FMO. Can a new player right now? I would probably go one step above this. But if I want to be an ethos, what would I need? Ethos is one of the issuers. It's a data-driven, tech-driven insurance distribution or InsurTech MGA. Let's see where they are. Yeah, so we don't have to go that high because I don't think we're trying to nerd out, but that's part of it. So the cost of break, it took me 2 tries in 2 weeks. I failed the first time, passed on the second. You end up getting an NPN. I got my NPN like maybe within a week of like literally right now. Let's see if I can find my NPN. Here's mine. This is what allows me to do work. So this is actually what you give out, which is your NPN 216-73614. I can't contract with the carrier until I had this. This is what was slowing me down. So I was trying to get that on the 1st, the 2nd, the 3rd. Today's the 4th. It's late on the 4th, and I was just able to get that. So now that I have that, I'm able to actually write policies and invest. I already have an appointment today with a no, that's not it. Let's see here. This is I have a I can't even talk. I have a meeting today to cover some of these things. So I got my NPN literally probably issued in the last day or two. My license was issued last week, and my appointment finalization will be probably tomorrow. So August 4th will be the first day because that is what is required for me to move forward with it. Now, if I wanted to start from the beginning, now they don't generate final expense leads. Smart Financial does these types, which are final expense, term life. I don't think they do final expense, term life and whole life. Typically under 65, Medicare Advantage. We're not doing Medicare. I'm not doing auto. I'm not doing homeowners insurance either. So mine is on life insurance, which is like kind of this, and we're going to check it out. So mine are brand new live transfers. That's who I'm going to be reaching out to. The cost of each lead's maybe $60. I'm starting at about a cap of 200 a day, and we'll see where it goes. So let's see what else here. The smallest sales, we talked a little bit about the different premiums. Bigger IULs are 3 to 5K per sale. Some carriers advance 9 months. We talked about it. You can reinvest in leads. I would recommend it. Typically, people say 1/3 reinvest. I'm showing you guys how to get to 25K a month in less than 90 days from scratch, just using your skill sets that you would learn. And I'm considering taking on a mentor as well. That I would just give a scholarship. You know, remember guys, this is an alternative to college. I have 12 years of experience and I have a college degree, and I've been in the financial markets for 10 plus years. That being mentored by someone like that isn't free, unfortunately. Who should take this seriously? If you're a college dropout, you can get licensed in a week. Ex-real estate or mortgage agents, brand new salespeople, anyone that wants to sell a financial product. If you're already in the Discord, this is one of the easiest mentorship funnels that I would offer. It's one of the easiest verticals. You can get started if you want to leave right now. You're going to be learning sales and sales funnels. This is in one of the largest and regulated ones. And again, if you want to be at the top of the food chain, you're going to get your series 6 or 7. So I would recommend joining the Discord if you're not in it. Links in the bio and all over all the social media. This is the funnel that we're going to be doing. Leads are from Smart Financial. They call them and transfer them over. They typically are I'm only doing the ones that are available. They have a UA space call center, so I'm checking and asking them. I'm only doing it when I'm up, which is 12 to 6. Not in the morning. I could do more morning if I need more leads, but again, I'm kind of opening it up. So we're testing that out. I haven't even gotten my CRM, but I'm not worried. At the end of the day, I live transfer, fill out the app, and get started. We're going to be looking at CRMs and automations. I don't have dials a day, but if I do get a mentor, I'll do some outbound stuff too and ask them to invest. So instead of doing that, I'll say, hey, look, let's grind it out and work together. But I'm going to take X amount of each commission because I'm training you, right? Contact rate, contact rate tracking, reinvesting commissions into more data. And so we're going to start doing the screenshots. There's a lot of guys trying to mentor this. There's a new agency being opened up down here, but nobody has opened up an office yet. And I am with the #1 producing office at Family First Insurance. So while all these other guys can say they've been doing it, I'm with a guy that's been in the industry for 5+ years. I negotiate one of the best splits. I talked to some of the groups across the country and all of them had no experience. So I wanted to get in with the #1 sales team, which I can cover later on. We're going to be doing call days. We're going to be looking at the Zooms and doing other things, but everything like that. So let's see here. I'm not sure about MLMs. If you feel like you've been MLM, then I would definitely get with the right agency. Selling only term. So we talked to other people that have done worse in healthcare, Medicare. They sold the wrong product. You want to get higher payouts, plus you want to get one that has a lower default rate, and you want to have you want to get paid a lot. So if you're chasing bad verticals, underpaid ACA, things that have a lot of that or final expense, the sales strategy that I'm going for is term, IULs, whole life, and whatever I can purchase, right? If it's more complex than that, I will get within the ecosystem and find the top producers and make that decision. But the people that I'm working with are making have made $1 million a year in their agency since they started. They're making $1 million personally, which means that's who I'm surrounding myself. 50K is too low. If you're coming in and your people are bragging about 20 to 50K, those are 5-figure months, guys. If that's what claps it up, I'll tear that guy's business plan apart. How can a guy that sold for 2 or 3 months be training you when his personal production has faulted and he thinks that the way to grow is to help others and start the agency side of it? Okay, where's your office? Where's your skill set? Where's your high producers, right? It's probably an expansion office under another vertical, and he's probably being trained by someone else. I would pass and get with a better team, someone that has more than 1 year of experience or a few months. Okay, the reason I was able to negotiate where I'm at is because I have 10 years of sales experience and I reached out to the CEO, and you can't just bluff like that. Good luck. Okay, it's going to come down to confidence. When they come to vet you, you're going to have nothing to stand on. So I'm working on qualified buyers. I also have an inbound system, not an outbound. I also have I'm at the point where I'm negotiating with lead brokers and seeing what the best fit is. I can stop my ads like this at any time. They're month to month. This is like luxury real estate. I sold in the top 1%. I sold 7 and 8-figure deals where I'm from, 50 units. I've always sold investment-based stuff. So it makes sense for me to go into life insurance, and the niche that I'm addressing is investment-based products for smart individuals. That's the kind of person that I want. If FFL doesn't have that, I might have to pivot to another one, right? But for now, this is where I'm going to get. I'll go and get my Series 7 when I have to, because that'll allow me to sell and work within a FINRA broker. If there isn't one, I might be the most qualified person at my brokerage. Great. Education's never gotten in the way. Okay, so I'm focusing on a lot of those things. My target is 5 to 6K per week within 90 days. And it's to be the most, again, if I sell 1 policy a week, that's great. If you're in the volume, you have to be able to get IUL type leads if you're going to do it. So if we go back to these types right here. Can you go back to the highest premiums in a 214 license without a specialty? And if there is volume there, like purchasable leads. There's no secrets here. Guys are gonna, let's go. What are the highest premiums I can sell with a 214 annuities without a security specialty? And is there lead volume to support it? IULs, 200 to 2,000 per month. Fixed annuities, 25K to 500K lump sum. Final expense, mortgage protection. The IULs, this is tax-free retirements, 250 to 500, and the comp structure is 3 to 6K. Fixed annuities, buy, sell term. And here is the other ones that we're talking about. Data lot, I've already talked to, not a good fit. We'll talk to some of these other ones if I have to. I can run my own if I want to on a ClickFunnels, unlimited, and you can bring that volume down. You're going to get way cheaper leads over time. This is what the top ones are doing. Can you describe what an IUL is? Just for those that don't understand it. Index universal life insurance. This is lifelong death benefit, tax-free cash growth, upside potential linked to the stock market, downside protection. You can't lose money in market downturns. It's designed to be a protection, a tax advantage asset with a tax-free retirement strategy or 401k alternative. How IULs work. You pay a premium. Part goes to life insurance, part builds cash. Cash value grows tax deferred linked to a market index, no direct investment. Index credit. If the index goes up 10%, you own a portion. If the index goes down, you earn 0, but you don't lose any. Tax-free loans. You can borrow against the cash value and pays out to your family tax-free. Pays 500 a month into an IUL. How fast do these grow in cash value? What would be the fastest? It would probably be a 20-year term IUL. Let's check. Higher premiums, minimum death benefits, maximum funding, MEC safe, index strategy to a S&P, cap rate and participation rate, higher caps like 10 to 12. So depending on how much, depending on how much you're looking for. So when you're talking to them, this is what you're talking about. So overfund the policy to the MEC limit. That would be 500 to 1,000 a month for a $250,000 cost benefit. Keep cost of insurance low. Use high cap multipliers. Choose a low fee carrier and fund heavily in years 1 through 5. What's the max? So if someone comes in and says, what is the MEC limit? 7 pay test. It says without crossing it, right? So there are caps to this. Death benefits, you could probably pay 1,000 a month would be the max. So if you're making a ton of money and you want a large death benefit, what's the shortest period of time to? A short pay IUL, max legal amount, 7 years. This is the shortest period you can fund max amounts without becoming an MEC. Requires lower premium per year. So if they do a 10-year or a 15-year, you can't pay more into a life insurance during the first 7 years than it's required to fund the death benefits. So if you if you pay out 105K, so if you 7 years of funding is 25 years of tax-free income. Can you do it faster? But you must be okay with one of these. Accepting an MEC, using a premium deposit. What is most common in an IUL? It's probably a 10-year. Here you go. The average, this would be the average year. So it would be an IUL profile, 30 to 55, 250 to 500, annual premium of 3,000 to 6,000, death benefit of 250 to 500. That's the minimum face. S&P annual point was 7 to 9% cap, 0 floor. Minimum death benefit and maximum accumulation and loan structure would be tax-free beginning at 60. Tax-free would be 70%, estate or legacy planning that. So the middle tier of IULs, so 300 is retirement. It's forced retirement plan. What would be the youngest you would see this? Age 0 could have been it, and it could have been covered for you. So if someone was smart and they paid, it would have been great. IULs for children, parent set up by a parent or a grandparent, paying $50 to $150 a month and generating cash value by 30. So this is the youngest realistic group, but in reality, a lot of these are actually going to be sold a little bit higher. Where is the most common? Right here. So I am in a great position myself to start selling life insurance and getting my Series 7 as well to expand a lot of those things. So, so I think for a simple person, what would they expect? Or where is the volume of IULs? Now, someone that's never sold a financial product like this is a financial product. I would, so variable, working class, 28 to want a retirement, life insurance, and tax advantages. W-2 workers, self-employed, very common. Those are going to be way higher. And parents buying it for kids. This is where we want to be in. What they want to know. What if the market crashes? I hate taxes. I don't trust banks. What if I need cash? You can borrow against it. I can't commit. You can adjust it, right? Is an IUL a financial product? An index universal life is, but it includes a built-in financial. It's regulated as insurance, not as a traditional investment, and you only need life insurance license to sell it. Permanent life insurance policy that provides a death benefit, a tax advantage financial tool tied to performance of a market index, has similar features to these three things, but that is, which one requires a Series 7? This is where you variable life insurance or variable annuities. IUL, indexed universal life, not a security. It uses index crediting, not an investment. Fixed annuities, right? So the highest I can sell with a 214 where there is volume is IUL. Is that correct? Is the top product on life only. IULs sales reached $900 million. All IULs totaled that. What is CGR? Let's see how fast it's growing. It's 24% of the life insurance market. So this is, let's see how fast it's growing. Wow, it's really, 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 really. And these are, selling, this is a financial product, and a lot of the people that are in it, it requires it's 3 to 4%, which is relatively short. You see, IULs is growing the fastest of all of them. Fastest growing segments are IULs, 10%. And that is 23% of all of them, total life insurance. What about variable? Does that account for a lot as well? Now, I used to think that life insurance was sleazy and scammy. Variable life is second fastest growing after IULs. Market share, life insurance plus a Series 7. So depending on sales volume is very high for IULs. So this is good. These are very, very, if I want to get into even higher financial services and financial securities, this is what I would get with a Series 7, which I'll probably end up doing. So that's everything, guys. Let me see if there's anything else I need to cover. 5 to 6 a week. So, what is the to make 5K? Probably 2. Okay, so there you go. I might get, I would say 2 a week. Now, for some people, they're bragging about this. I would say if it's where the volume's at, that should be pretty regular. So all I have to do is sell 1 IUL and I'd be making 5K a week. That is so easy. 1 IUL every 10 days if my average is at 1 a week. At the most 2 a week to hit 6K. If I had 5 appointments, which I'm getting more than that, my close rate will definitely be around that. There you go. So if I'm getting scheduled 4 to 6 appointments a week, I plan on scheduling 1 to 2 a day. And that's the whole point. So that's everything, guys. That's my business plan, what I'm getting into, where it is. If you're watching this and thinking, can you do it? Absolutely. I think if you're trying to grow, you have to see how much money you're making. Why would I mentor people that think about it. If you're broke and you don't have any money and you're also not driven, why would I teach you how to sell financial products? It makes no sense. So I would recommend that this is something that you guys look into. This is my announcement that I'm going to show you guys how I do it. I'm scaling an online course, which is unregulated. So is e-com. But if you want to get into a regulated industry and get professional certifications, then this would be a great way to do it. We already talked about some of the series that you can go, and becoming financially literate is extremely important. So if you want to become financially literate as well, I would say that's part of the program. If you're not, then it's the whole difference of why someone would invest. If you want to do e-com and all these other high ticket remote, work for somebody else and be an employee and work remote, those are mid-level goals. Great. If you want to step up, that's still something that you need a lot of training and certification for. But the people that become certified closers within that, the lifetime resources are about step ups, business partnerships, certifications, investment banking, financial services. These are the types of high level things that you're going to want. Thanks for watching.